call the subcommittee meeting order for Senate Study Bill 3034, which is a property tax reform bill as proposed by the Iowa governor. A few editorial comments up front. The why. We are here today in this General Assembly because Iowa is on average the 10th highest property tax state in the nation and has maintained that level for the last substantial amount of years. The Iowa Constitution, under home rule, provides for a lot of flexibility for cities and counties. What is clear about that provision of the Iowa Constitution is that the taxation system that cities and counties use is under the purview of the Iowa General Assembly. The governor, the House, and the Senate, all in the first couple of weeks, have filed bills of their points of view and their initial discussions on how to address our property tax woes here in the state. We have allowed the shareholders a healthy amount of opportunity to review all three of these proposals. And now that we have cleared the funnel, we are here today to start the next phase, which is to solicit meaningful public feedback on these proposals. And we try to find if an art of the possible exists to come together with a new property tax for the state of Iowa. That concludes my opening comments. Senators, any opening comments? Okay. What we will do is I will allow the governor's office to read their statement up front, or any private comments they want. Then I'm going to take that back. We'll go around the room. Who you are, who you're with, how you registered on the bill, any comments towards the bill, and then we will go online to Zoomland. If anyone wishes to speak to the bill, click the reactions button at the bottom of your screen. That will digitally indicate to us that you wish to speak to the bill, and we will call upon you in the order that we see you. I think I'm going to screen over this here. So, okay, without further ado, go ahead.
Thank you, Mr. Chair and members of the subcommittee. Molly Sauer, legislative liaison for Governor Reynolds. Appreciate the opportunity to speak today. When Governor Reynolds took office, Iowa's top income tax rate was among the highest in the nation. Now, after historic tax cuts, our state benefits from a 3.8% flat income tax, a top corporate tax rate approaching 5.5%, no taxes on inheritance or retirement income, and an unemployment insurance tax that's just half of what it used to be. Thanks to the Trump administration's historic tax cuts for working families, Iowans are set to save on federal taxes as well. And because the governor signed a bill conforming to all federal tax cuts of the state level, Iowans will get these same cuts on their Iowa taxes, eliminating taxes on tips, overtime, and Social Security. Yet for all the progress we've made on one issue continues to impact Iowans in every community and at every income level, which of course is property taxes. In fact, levies are rising faster than both inflation and population growth. Governor Reynolds' plan for property tax reform is estimated to save taxpayers more than $3 billion over the next 6 years. Governor Reynolds' proposal includes several pieces. One, it implements a 2% cap on total revenue growth for all taxing authorities, with exceptions for debt service and school funding. Two, it moves the assessment schedule from every 2 years to 3 years. Three, it limits the overuse of tax increment financing or TIF districts. Four, it freezes property tax bills for seniors ages 65 and up in homes valued at $350,000 or less. Five, it expands tax-free savings accounts for first-time homebuyers. Six, it eliminates election mandates for county treasurers, auditors, and recorder positions. Seven, it establishes a grant program to assist local governments with new shared services agreements. And eight, it accelerates the secure and advanced vision for education or SAVE funding stream to generate additional property tax relief. With me today, I have Patrick Tomka, the governor's tax policy advisor, as well as staff from the Department of Management and the Department of Revenue. We're happy to take any questions. Thank you.
Thanks, Senators. Nick Lanning, representing the Iowa County Recorders Association. We're registered opposed to the bill for Division 11 on the appointment provision. I have two recorders here today who are going to give some comments on the why.
Good afternoon. My name is Julie Haggerty, and I'm currently the recorder in Polk County. I'm here to voice my opposition to a section of the SSB 3034, more specifically Division 11, which suggests that some county elected officials, including the recorder, should be appointed in lieu of election. I have always believed that county government is the best form of government because of its elected officers who provide local access to services and real-time decision-making that creates efficiency through effective and immediate problem solving. Institutional knowledge and direct responsibility by an elected official help resume recorder services within 24 hours after natural disasters have occurred throughout the state. Recorders are elected to be accountable to the public for their budgets and provide quality customer service. Recorders are also charged with protecting vital human event records, issuing certified copies to entitled persons, and filing documents affecting real estate on the day received. The integrity and accessibility of these records is an important function, along with revenue collected for the state through several mandated requirements of our office. Funds brought in by county recorders help support operations and are a direct financial relief for county and state taxpayers. In 2020, during the COVID outbreak, our Governor, Kim Reynolds, recognized that recorders play an important role in the state's economic system. She declared that county recorders and their employees are essential workers, and that filing timely real estate documents and performing our other services are important components to the economy. Issuing certified copies of vital records is becoming even more important as legislators pass bills requiring more documentation and certification to show proof of identity. Recorders' offices throughout the state can provide that documentation while you wait, without an appointment. Suggesting that the recorder be an appointed position instead of an elected public official is short-sighted. Two counties have tried to combine the recorder's offices with the auditor under the assumption that this in turn would save funds. In fact, there has been no significant staff reduction or cost savings to taxpayers. Recent events throughout the state have proven that citizens want their collective voices to be heard, not just those of 2 or 3 board members. I ask that you reject the provisions in Senate Study Bill 3034 to appoint recorders in lieu of election.
Jordan Hill, Warren County Recorder. We believe that it is going to eliminate the voice and choice in selecting their local government representatives. It erodes the separation of power and weakens checks and balances within county government. It removes voter-responsive, real-time, hands-on leadership, directly impacting service levels and responsiveness. The Board of Supervisors already have control over our budgets, and there is no cost savings to taxpayers by eliminating the election of reporters, auditors, and treasurers. Elections will still be held.
Brittany Lovely here on behalf of Ownwell. We are registered undecided on the bill. We appreciate the burden of proof conversation that the governor has included in this legislation, and that is something that we are working on. We want to make sure that for residential homeowners that the burden is on the local assessors to prove if there's ever anything in the appeals process. So we appreciate you taking a look at this and look forward to continuing to work with you.
Okay, we're gonna take a little different this subcommittee. As we go around, supposed to be trying to make notes here at the end and come back. I'm going to ask some questions in between here. So, first question I have for you on your representation and the provision of this bill. How many states operate under a burden proof like this?
Texas and Kansas have fully implemented, and there's movement in both Ohio and Indiana.
And do you have any data points as to increased legal costs on the representation of local governments there related to shifting this burden?
We're looking into that. I know that has come up in the past. I will say that we do know some assessors that are working in Texas and Kansas that appreciate this because it streamlines the process in terms of quantifying the data and the numbers. We'll get back to you on that. But just because of how the assessors have the information, it makes it a little bit easier in terms of when there is an appeal.
Thank you, Mr. Chair. Doug Strike, here with a couple different clients. First, City of Des Moines. I'll defer my time to Scott Sanders on that. Second is the Iowa Association of County Auditors. Both registered undecided on the bill. The auditors share the concerns of the previous county officers. We are a little bit different in that the auditors oversee elections. They include the elections of folks who oversee our budget and the county supervisors, and we think that puts us in an interesting conflict if they are actually appointing us and we're providing the oversight of them, including their elections. So we believe that that part of the bill should be eliminated. Thank you.
Again, Scott Sanders, City Manager here in Point. Thank you for the time. I'm going to dive right into Division 1 with concerns about the cap on the unassigned reserves at 10%. This would be devastating to local government budgets. The average for a city on the June 30th date for which this would apply should be around 30 to 35%, allowing for bond ratings to be maintained. Otherwise, the bond ratings would be devastating as well in downgrades. That would then cause higher interest rates on the bonds that we issue in the debt. That would then lead to less capital improvements within our cities. The next division of concern would be involving the 2% cap on the property tax growth annually. Obviously, that is not enough to sustain any organization, let alone the city government, with the essential services that we need to provide. Even our public safety budgets, when we pull those out, are growing at 4.8% a year. So we would have that gap just on the public safety side, and then you would need to add in all the other budgets as well. That percentage also does not include any potential changes on pension costs. And for those of you in the room that have been around a while, may recall that just about 12 to 13 years ago, we had the 411 MFR PSI contribution rate of 32%. That's 40% higher than it is today. That additional cost to Des Moines would be $10 million a year in additional costs. Again, due specifically to public safety employee pension costs. It would be hard not to take that out of the budget. The last point I'll probably make is on the TIF changes. Need to understand that by limiting the TIF to only the public infrastructure, there would be no opportunity to help businesses that are building campuses, which we often do have, and that includes private infrastructure, and the analysis that they must provide to us before we would offer any TIF shows that there are gaps in their budgeting for their projects, and therefore there would be fewer economic projects in Des Moines, and I would assume in other cities. I do want to say lastly, I appreciate the $10 million grant money that is mentioned as well. That would be powerful to get that started, so thank you.
Scott, real quick, you mentioned 4.8%. Over what period is that? Is that, you said an average, how far?
5-year average.
Okay. And that was for public safety, you said?
Yes.
Or that entire budget?
Yes, public safety, police, and fire.
So what
It
was?
would be slightly lower for non-public safety. It'd be about 3.9,
Right.
about 4%.
What's your overall 5-year average?
So it would lean towards public safety, 4.3, 4.4.
Okay.
Yeah, we can get you any of the historic data. Who's your second group?
Scott, sorry, one more thing here. You're all, is that your, when you say 4.3, is that your all in, or is that, so?
That is
You're including
general fund operations.
Okay. But I mean, are you including trusted agencies in that average?
Yes.
Yeah.
Yes.
Good afternoon, Senators. Matt Grunwald with Farm Bureau, and we're registered undecided on this bill. We appreciate the governor and the legislature for making property tax a top priority this session. Farm Bureau appreciates several key components of this bill. Efforts to control the growth of local government budgets are essential to slowing property tax increases and provide long-term sustainable relief. We strongly believe maintaining the agriculture productivity formula and rollback is a system that's worked well to prevent dramatic swings in ag property tax liability and provides predictability for farm families. We also support exploring alternative revenue sources to reduce reliance on property taxes, including the bill's use of SAVE and local government reserve funds, and look forward to learning more about those proposals. We encourage a careful review of any changes to credits and exemptions to avoid any balloon effects that could shift tax burdens among property classes. Finally, we encourage passage of an overall property tax reform package that delivers relief to all property owners, including agricultural property. Thank you.
What are your hard yeses and nos on balloon effects?
Could you more specific, just,
Well, you said you're concerned about any balloon effects, so what's in the back of your mind of where you're concerned about balloon effects?
so looking at property taxes as a whole, as a balloon, if you're providing relief for one area, if the total balloon stays the same size, those dollars would be picked up by other property.
Well, I get that, I'm saying, but specifically, what balloons are you concerned, what effects are you concerned about?
No, we
Like, is
just,
it homeowners that you don't wanna see get advantage there, or?
we just want to take a close look at any changes to the credits and exemptions to see if there are any overall effects. And obviously, that would encompass the entirety of the bill and all the effects of the other provisions of the bill as well.
Good afternoon, Chelsea Boyd, representing the Iowa League of Cities. We are registered as undecided, as there are several components of the bill that we appreciate and reflect shared goals between the state and municipal governments, as well as several challenging components from a service delivery perspective. First, the decision to place new valuation outside of the 2% revenue restriction is important to us. While we believe the definition could benefit from some refinement, its inclusion recognizes that both state and cities want to continue to encourage economic development and growth in Iowa. Second, the proposed $10 million for shared services grants is a meaningful investment. Local governments are actively looking for efficiencies, and one of the biggest barriers to that work is the upfront costs associated. The state's willingness to partner in these costs by providing seed funding is appreciated and will help shared efficiency goals. However, our research shows that over time, the funding provided by this bill grows more slowly than external costs imposed on the cities. Since 2015, the costs that drive city budgets have grown well above 2%. Construction materials have increased by more than 4% per year, employment costs by more than 3%, and consumer inflation by nearly 3%. Additionally, a significant portion of those costs in the budgets are set outside of local control, including pension contribution and insurance rates. A fixed 2% inflation compounds that gap over time, particularly when layered on top of the levy limits that cities are currently operating under. Over time, the cost of providing the same level of services grows faster than the resources able to support it. Because cities are required to adopt balanced budgets and cannot run an operating deficit, that gap is reflected in service levels and project timing. There's also a statewide fiscal impact to consider here. Rating agencies evaluate the state legal and financial framework cities operate under to provide credit ratings for bondings, and that assessment is applied to every community in Iowa. After the levy limits adopted in 2013, Iowa City scores in that category were lowered, and further restrictions may result from further restrictions on our limitations. Finally, I want to speak very briefly to economic development and quality of life. Cities in this share in the state's goal of growing Iowa and attracting new residents and employers. And that partnership happens at the local level through housing, infrastructure, downtown redevelopment, and site readiness. Property tax revenue is the primary local investment that drives our shared growth goals. Tax increment financing has been the primary tool used to make those projects possible. When the reduction in TIF capacity is combined with the limitation on other ongoing resources, cities are less able to partner with the state and businesses on expansion and new growth opportunities. We appreciate the conversation of providing property tax relief, and we want to continue to work with the legislature and governor's office to find a path forward that achieves your goal while preserving cities' ability to deliver consistent value to the taxpayers and keeping our state strong. Thank you for the opportunity to share our perspective.
Okay, Chelsea, hold on there. So, I get your feedback on the 2% hard cap. Also working in this bill is the rollback as well as 718. How many Iowa cities are above the 810 limit right now on 718?
I don't have that number in front of me. I can check.
Okay. 403.
Okay.
Well, Senators, thank you very much. I'm Brad Kavanaugh. I serve as the mayor in Dubuque, Iowa, and my colleague Anderson is actually going to pass you some items from Dubuque that I'd just like to share with you today. You might have seen Dubuque actually made the news last week a little bit. We were talking about these property tax bills in our city council meeting, and I just want to make a couple of things clear about that. You know, the discussion, I think, in the news came out as, oh, poor city is complaining about losing money again. That wasn't what the context of the discussion was. So I want to share some perspectives on what that discussion was, and then also some feedback, I think, and happy to answer any questions if I'm able to, and get you the answers if I can today. So, the discussion that we really were having about this came down to the perspectives of our taxpayers. I represent the taxpayers of the city of Dubuque, Iowa. And those taxpayers are asking for property tax reform. They're making that clear to you. They're also asking for a return on investment on the taxes that they're paying in our community. So they're asking for something to be able to see what they can get from their tax money and the services that they get and they need to enjoy and sometimes need in the city of Dubuque and other places in Iowa. Some of those taxpayers are businesses, and those businesses speak to us frequently. And in fact, I think the speaker after me is Jason White from Greater Dubuque Development Corporation. He'll say a little bit more about that. But basically, our businesses are telling us consistently that they want more workforce, they want access to a better workforce, they want to make sure that people are staying in Dubuque and staying in Iowa. And they're asking the question, well, how do we do that? How do we get more workers? And I think the answer is we keep our kids and our grandkids in the state of Iowa and in the city of Dubuque. But then we also invite new people to live here and be a part of this. We grow our population, is the short version of that. Our residents as taxpayers are also telling us that they have some things that they want to see in our community to be able to work and live. And in Dubuque, we have some really clear guidance from our residents. So we actually asked them a lot of questions, and more than 6,000 residents and stakeholders provided information for our comprehensive plan. We had more than 3,000 ideas that were shared for something we called Envision 2030, which was visioning for what we want in the next 10 years in our community. Most recently, we had over 35,000 responses come in for our Parks and Recreation Master Plan, which actually blew our mind too. And as a city council, we set our goals and priorities based on this feedback every single year. And this feedback that we received this last year has told us some very specific things. And I heard this when I was on the campaign trail myself this last year. Major flood mitigation projects are in need in our community. Major sewer projects, road improvement projects, both annual and major and big ones that are going to last for years. Parks and recreation improvements, specifically increased maintenance and increased programming is what's being asked for. More firefighters. Our firefighters are asking for 15 more positions to meet a national standard, and our residents are saying we agree with them. It was a clear campaign issue for us. More police officers. Right now, we have 12 vacant positions. It's hard to recruit police officers, and we're having a difficult time, but we're doing our best. In order to do it, we have to raise incomes, we have to raise investment in personnel, so increase salaries and benefits at times to be able to do that. We're working to invest in the taxpayers that we have in our community. So one more point I want to make from a perspective issue is the issue of TIF. From 2010 to 2025, Dubuque has invested $95 million in tax increment financing. From that investment, we calculate $836 million in private investment for 91 separate projects. This is directly contributed by our calculation to retaining and creating over 5,000 jobs in the Dubuque area. So businesses have told us that they want to grow in Dubuque, but if they have to, they will grow somewhere else, and that's a challenge for us. So finally, I want to close with some ideas based on the specifics in the bill. The hard 2% cap, you've heard this already from cities, it is a challenge for us. It's going to be a major challenge for my neighbors in Dubuque County. We would appreciate tying this to some sort of inflationary adjustment. The next is TIF sunsets. An idea that we've discussed is this possibility of, we understand that the word perpetual TIF is not a word that everybody loves, this idea of something just lasting forever. But what if there was a 20-year TIF, and after the end of that 20 years, there was an opportunity to renew that? The community at that time can make that decision. I'm not going to be the mayor of Dubuque in 20 years. I'm saying that right now out loud. It's not going to happen. But the mayor at that time is going to have to make some decisions, and it would be great if the community could make that decision together at that time for themselves. So I think that could be a good idea to be able to tie to that. We also asked that property tax exiting the TIF agreement does count as new growth for cities. That's something that would be important to us. And then finally, we do appreciate the recognition that this 10% limit on reserves is definitely too low. I'm pretty sure that 35% reserve is what is required by Moody's for a AA rating for cities. I would want every city in Iowa to have a AA rating. I think that's a good thing to shoot for. So I think raising that cap would be helpful. Happy to answer any questions if you have.
Thank you, Mr. Mayor. One question, you talked about the renewal after 20 years.
Yes.
So, and I'm not going to put you on the spot here now, because I know you're proposing it, you're not going to negotiate and agree, but I would appreciate that. So how do you, so the first renewal would occur in 20 years, or like, what about like perpetual TIFs right now? Like,
Yeah.
what would you propose, kicking the ball in the court here, when would you propose that first renewal on these perpetual TIFs?
Yeah, that's a good question. I think at a higher level, because I don't know if I know the answer to that right off the top of my head, but I think at a higher level, some of the areas that I think of, just even in Dubuque, we're the oldest city in Iowa. We've got areas that have slum and blight that need more than 20 years to be renewed. Our downtown is a great example of that. I mean, it's one of the areas that we do have a perpetual TIF, and in that area, we've had a lot of different projects. And what happens is we don't have a project that just stays in one place, and then we just keep pulling that from that one project as a piggy bank. That project is done, we move on to the next project to be able to continue to work through that district and be able to do that. So whether it's, you begin that renewal sometime within that 20-year period, at the 20-year period, I think that's a good question, Senator.
And I'd probably come back to at least these prior, I'm not gonna put you on the spot now, but, because I don't have this piece of data. How many cities in the state of Iowa have their entire city in an urban renewal plan? Not a TIF, but an urban renewal. Okay, thank you.
Thank you.
Hi, everybody. My name is Jason White. I serve as the president and CEO of the Greater Dubuque Development Corporation. I've had the pleasure in my career of being in southern Iowa, west central Iowa, eastern Iowa, central Iowa. So I've been in this business a long time. And one thing I want to talk about today, the mayor already mentioned, is a little different than maybe a lot of the other folks talking about the property tax aspect of the bill. Is to talk about a tool that grows our state, and that's tax increment financing. The mayor talked a little bit about that, and how that impacts Dubuque already. And so, from that standpoint, we're not neutral. We don't take positions on a bill, but certainly when it impacts the growth of our state, we're never truly neutral, and certainly tax increment financing is a tool for that. Now, in our community, we're also a border city, which I think is also important for this conversation as well. So, as we're competing with neighboring states that are also aggressively trying to court our own companies, it's important that we maintain that tool, tax increment financing as well, because it's the one tool that we have. We also are an older city, so we really do have a dependence upon capital stack for redevelopment projects, historic tax credit programs, redevelopment programs, TIF. Those are all very important for the redevelopment of our downtown and our downtown districts. If the proposed TIF changes had been in place, proposed in this bill, had been placed years ago, many of Dubuque's most transformational projects would not have moved forward. And certainly those projects meet that but-for case. The examples I would cite, if anyone's familiar with Dubuque, are the security building, the Roshek building, the Voices building. Those are all projects that help reshape our downtown, helped us retain and attract major employers, sustain hundreds of jobs, as the mayor mentioned, and also relied on a complex capital stack of different tools that we could use to continue to make those work. And when I say that they wouldn't have moved, likely would not have moved forward, is one of the projects we're talking about, for example, is Cottingham and Butler. 2009, they had a choice. One of their leading insurance companies in the state of Iowa, do they build downtown? Do they build outside the city? Do they leave the state? They chose to go downtown because they had a plethora of options that were available to them, largely because they were in a perpetual TIF district that allowed some additional levers for them to be able to pull for their project. And I know the president and CEO of Cottingham and Butler, David Becker, is on my board. He's had conversations with the governor's office to also explain a little bit more about that narrative. The Voices building is another example, also in a perpetual TIF. It was aided, obviously, in large part because of the various tools that the levers they could pull, new market tax credit programs at the federal level, things that they could do within their TIF districts, such as facade programs, low interest loans, things of that nature that were made possible as a result of that. And certainly the usage restrictions in this bill for that rebate, in terms of how it could be used, would have challenged them and have also forced them to make a decision whether to stay downtown or move outside the community as well. So, overall, and also I think this impacts both urban and rural. So I live in the city of Dyersville, for example, and I was talking to the city administrator a couple days ago, and he said that, largely cities don't want to put slum and blight perpetual TIFs in place, but there's a lot that goes into certainly setting those up. But the reason that they are put in place is because of the unique circumstances of those redevelopment areas, from environmental issues, higher construction costs, aging infrastructure, financing constraints that the private market cannot overcome. And so, weakening that tool for those kind of circumstances does impact their ability to redevelop their downtown and targeted areas of their community. So those are a few things I just wanted to point out with the TIF provisions in this bill. And happy to be a part of the conversation. The mayor put something out there before, and enjoy the conversation going forward.
Hey, sir, real quick before you pass it on, so you listed off a variety of projects up in Dubuque that you stated would not happen without TIF. Without going through those individual deals, what section or provision in the code, I mean, there's a lot of TIF operations going on here. What specifically is being proposed that would have, as you stated, not allowed those projects to go forward?
Well, I think one of the things that is important is with the 20-year TIF, we have a very sizable downtown area, for example. So we have different parts of our downtown. And within that 20 years and beyond, there's different parts of our downtown that are impacted through projects at different points in time. So some might be at the first year, some might be at the 10th year, some might be at the 20th year, right? So the ability to have those revenues available for when those opportunities do exist is important beyond the 20 years that's currently established with this bill, limited to the 20 years. The other thing is just in being able to use the rebates for different things beyond what's stated in here. I think it's utilities, things of that nature. When these developers are trying to justify themselves to move these projects forward, to get that effective ROI, where they choose to invest in the downtown or beyond, having the ability to look at that increment for more than just specific things, to make their decision moving forward, is very important for them as well.
So the perpetual TIF and the utility provisions are your specific?
The usage, how that rebate can be used,
Okay.
and also the perpetual limit.
Okay.
Good afternoon, Lucas Finken with the Iowa State Association of Counties, something I said, proud of leaving. And the Iowa State Association of County Supervisors, both registered undecided. For ISAC, just want to echo what was already brought up by our elected officials that under this proposal would be appointed. Just not interested in doing that, so just to note that. From the perspective of county supervisors, they're growing increasingly frustrated with the limitations, stacked upon limitations, stacked upon limitations. They're much more interested in a simpler system that's more predictable. So as this conversation continues, I believe we'll talk more about this next week, Senator Dawson, maybe looking at that jurisdiction level limitation rather than continuing to stack. So look forward to continuing the conversation.
Okay. I'm going to ask, not to pick on one entity over the other, I'm going to ask you, how many of your counties are still under, would be above the limit set in House File 718?
So the 350, 395, I'm not sure right off. My understanding is it has gone up since the marketed Dirty 30. But I'm not sure what that number is currently.
22.
It has gone up. Very good. Thank you.
Sorry, hiding back here. Amy Campbell, I represent Polk County, and of course my notes just went right away the minute Amy Campbell representing Polk County. We are registered undecided at this point. You've already heard from our elected officials on the concerns we have about the appointed positions, but we do appreciate that the bill takes into consideration new valuations so that we can meet the needs of our expanding population. Also think that the 20-year limit on urban renewal areas is a reasonable compromise. And are very excited about the local government shared services programming. We are actively engaging with many of our communities in the Polk County area about shared services. We already have some of those arrangements, And we know that some of those services come at a high initial infrastructure cost that would be helped by something like that. We just want to make sure that the property tax system that we create actually allows us to sustain those once we put them in place. We do have a couple concerns. I won't repeat what you've heard. I have emailed you our suggestions and our thoughts on this. But one of them, to reiterate what Mr. Sanders said about the unassigned fund limit of 10%, it just doesn't work from a cash flow perspective, since counties collect, local governments collect their taxes in September and March. So therefore, 25% of the year is already gone by before we start to collect those revenues. So it doesn't, that 10% doesn't really reflect the cash flow situation. It also excludes transfer amounts, which are highly problematic for the Rural Basic Fund, since 76% of the Rural Basic Fund receipts are required to be transferred to the secondary roads to qualify for the Road Use Tax Fund. We also want to make sure that what is, with the 2% being across sorry, I'm losing this, with it being across all funds, that we want to make sure we're not encouraging local jurisdictions to do bonding, which then you pay interest on, to be able to do that. And then we do have a small fix on the definition of property tax dollars. It doesn't appear to include the state replacement for commercial and industrial. So we sent you some suggestions on a change so that it would help us in that transition year to make that more workable. Thank you.
Thank you. My name is Carl Lingen with the Iowa Public Transit Association. And our concerns for this bill is, as some of the others have mentioned, is overall, our statewide levies that we have access to, there's concern with the 2% max. Right now, our statewide levies on average is only about 53 cents out of the total 95 cents in there. Only 5 cities are at that cap. It's showing a good usage, a good efficient usage of transit levies for our public transit systems in Iowa. Our cities really manage this very well. In fact, 15 cities have lowered rates since 2021, which we think is effective in that. We just have some concerns with that. If that 2% is in there, that could then need some cuts of service for our public transit systems that rely on that levy.
Hold on here real quick. So I got a question for you. What is your mixture of property tax versus federal funding on your total transit budgets? Do you have an average across all your entities?
So for average, for some of our entities that DART might be slightly different, but for the vast majority of our systems, really the majority comes from federal government on there. So you're looking at probably high as 80% in some instances.
Okay. And then how has your funding stream been from the federal government in the last few years?
Last few years has been up and down on there, but the funding has been fairly good. The funding mechanism, though, is for the majority of it for buses, for the actual purchase of buses in their infrastructure, or has been for new buildings for some of our rural operators.
Okay. I'll ask you a question, follow me on an email at some point in time here. But you said that since 2021 that the majority of levies have been lowered, which I would expect because of the high valuation coming in there. My question to you would be, what would be the average assessment growth across our public transit entities, and what has the levies been lowered in correspondence with?
Great question. We'll get that back to you. Thank you.
Hi, Dustin Miller, represent a couple entities here. I'll handle the assessors first. It sounds like Senator Dawson, you're interested in some specifics, so hopefully I'll scratch where it itches. We are undecided. You know, in our conversations on the assessor side, our goal is to provide technical assistance in the process. You as the legislature set the playing rules for assessment. Talking about specifically the 3-year process, there is some questions about would we see peaks in that, but in working with the governor's office, you know, the tools and how you process this together. And nothing stops us from assessors from doing things in the off years too, which you see people doing even in the 2 years, but it would be less work certainly in doing it 3 years versus 2. In regards to the burden shift, it's our job to prove the valuation. So we just want to make sure, in working with you, Senator Dawson in particular, you are very cognizant of, in order to get property tax relief, we don't erode the base. So interested in that data, as you were asking about other states have done that, but ultimately it's our job to prove what that valuation is. Look forward to the task force, which hasn't been brought up. I would assume that some people will be interested in, looking at the potential for regionalization of commercial appraisals in smaller counties. But one of the things that we see that we'd be interested in talking about is out-of-state tax agents from Minnesota and Illinois working on behalf of contingency fees, where their wins, quote unquote, are losses for other taxpayers. And ultimately as well, one of the things we would bring up specifically is on the new valuation. Appreciate the changes that have been made in all three proposals. One of the things that is not necessarily clear from the assessor standpoint is when new valuation comes online off of an abatement or a local exemption, how that gets calculated. We'd love to work with everybody on that. On the Chamber Alliance and developer side, I want to talk specifically about the TIF provisions. Definitely appreciate the work we've done to make our whole tax system more competitive. And we hope this property tax discussion looks a lot more like the income tax changes. We're working towards a more balanced approach that is still pro-growth and not just restrictive. So the specifics, we're not against TIF reform, nor should the TIF provisions stand in the way of property tax reform, which I think is an important key. But we think there are solutions to get to the goals that I think that are in this bill. One, the release of more increment, and two, impact on the state backfill. But we think that there are solutions out there in some bills that you sent across last year and in this bill that could strike a better balance and not stymie growth. First and foremost, the 20 years moving forward is pretty reasonable compared to other states for new districts. However, things to consider is abandoned malls like Valley West Mall just went into a slum and blight district. And those are things to consider. Immediate restriction on perpetuals, we've heard a lot about that. It's important to note that two of the big awards announced from IEDA on Friday, both landed in Vinton and Waverly, are within perpetual districts. It is a competitive advantage. It gives you the ability to land very large projects. So just, I think usage may be a better way than restriction, but certainly want to work with you on that. Restriction to public infrastructure. According to CDFA's state comparison of TIF, we would be the only state in our surrounding area in other states like Indiana and Oklahoma that we compete with that would have such a restriction. So that restriction in particular feels like we become a pacifist while everyone around us is armed. On the double dip, understand completely the concern there, not getting a TIF award and an abatement award. But again, on Friday, the Premier Award in Bondurant is getting public infrastructure through TIF and then also receiving urban revitalization abatement. So just want to think through how these things actually work. And then finally, there's nothing in this bill related to expanding of housing like the Senate TIF bill last year. So if we are going to concede ground, we think a better balance would be to also strike ground in improving housing. And lastly, this bill does not have any rollbacks. I think it's an important discussion that we had a lot last year, Senator Dawson. If the rollback changes move forward, which is not in this bill, it is important to note that if we were impacting in a TIF discussion the state backfill, we should also potentially have a discussion about a rollback change having an impact on existing deals maybe at the same time. So thank you.
Good afternoon, Logan Shine, representing Master Builders of Iowa. We're currently undecided on the bill. Appreciate the governor's office and the legislature putting an emphasis on property tax reform this year. Specifically, as related to the governor's bill, Division 4, we would ask to be removed, rationing down the available funds for builders and contractors. Would be something that would be opposed to. So, thank you.
Good afternoon, J.D. Davis with the Iowa Association of Business and Industry. I think we've now turned the corner towards the commercial and industrial taxpayers as we move down the way. I would say to our friends from the ag sector, we have the same perspective. We want to make sure that as we move through things, that the burden sharing remains somewhat like it is now. Commercial industrial pays approximately 54% of the property taxes in Iowa. We're registered neutral on this bill. When this bill was before interesting feedback that we received. Probably more of a reflection of our current property tax system and how people have been trained by it. One of the reactions we got when we sent the bill out to our membership related to the cadence of new assessments coming every 3 years. Interestingly, large property taxpayers saw that as less of an opportunity to appeal because so often the assessments they have are something that they have to work with local governments to make sure that they believe they reflect actual values. And they saw that as an opportunity to lose some chances to make those appeals and to try to take that on. But I do think that's a reflection of the past. So appreciate that.
Dave Bristol, Iowa Taxpayers Association. First I want to say thank you to Sharon Dawson and this subcommittee for meeting today, to the legislature and the governor's office for engagement in property tax reform. It's an important topic that needs to be addressed. Generally, all the proposals in this building right now are better than the status quo for the majority of taxpayers. But none of them are perfect, and I would just encourage the legislature not to allow perfect to be the enemy of good this year, and ensure that we get something by the end of session. On this bill, ITA's executive committee met last week and sort of established where our positions are going to be on a number of provisions throughout the bills. So on this bill, ITA does support the levy limits. This is the most straightforward way to limit the increases in property taxes for all classes of property. Really good tax policy starts with responsible budgeting. ITA has long had a position on TIF that is an important economic development tool, but we also support a 20-year limitation of the time period. We would caution that other changes may reduce the effectiveness of TIF as a property tax or as an economic development tool, so just want to be mindful of that. Finally, ITA also supports the assessment changes in this bill in section 86 that deal with increasing information that taxpayers get from the assessors and shifting the burden in certain situations onto the assessors to prove the values they set. Generally, ITA doesn't support targeted property tax relief that just helps one subclass of taxpayers. And so we have a senior tax freeze in this bill. However, the way this works mechanically in this bill, it does not create a shift as other proposals have. So we just, again, it doesn't directly shift it to other property taxpayers. Finally, I just want to, again, thank you for considering this reform this year. We continue to evaluate all of the major proposals in the building, and but once again, just going to end with this. To leave this session without some solution to property tax, I think is a disservice to the Iowa taxpayers, and I really encourage you to find a way to get something done. So, thank you.
Good afternoon, my name is Laura Book and I'm with the Greater Des Moines Partnership. We are registered undecided on this bill and would like to direct our comments towards Division 6 and the changes it makes to the TIF permitted uses. The partnership sits in a unique position as we represent not only 13 counties, their cities, and their chambers, but additionally a larger group of private business investors who represent a wide range of viewpoints and interests. There's a consensus among this diverse group that TIF is an essential economic tool that should be protected. We appreciate and understand the governor's efforts to evaluate the system and identify areas for refinement. Our concern is that changes to permitted uses could unintentionally limit communities' abilities to respond to economic disruption and compete for new investments. The city of Perry, one of our members, provides a clear example. When the Tyson plant closed in 2024, impacting roughly 25% of the local workforce, Perry leveraged TIF strategically to help attract JBS and ADR axles in a highly competitive environment. Those agreements included performance guardrails and accountability measures helping restore jobs and stabilize the community. This shows TIF working as intended, mitigating crisis, attracting investment, and generating measurable returns. Finally, in partnership, we are part of a larger effort to keep Iowa competitive on a global scale and in an extremely competitive environment. Site selectors are often looking for reasons to take locations off the list, We are concerned that removing this economic tool will take Iowa out of running for future consideration. We look forward to having more conversations. We know this is just the beginning, and we thank you for your consideration of our comments. Thank you.
Hello, I'm Ashley Ost. I'm General Counsel at Hubble Realty Company, and I'm here to talk about Division 6 of this bill related to the TIF. And so there are three main issues that we have with the TIF provisions. The first is removing the economic development ability for housing development, housing, industrial, and commercial projects from the ability to use TIF. The second is perpetual TIF is a key tool for the communities that we work in. And the third would be the removal of the tax levies from the TIF that also has the abatement option. So those are kind of our three main issues with that. We are asking that that division get removed or pulled out to take on separately. And so we do have a project that we are currently working on. We've been working on for the last year with the city of Oskaloosa. And so we have been working with the businesses in that community, Musco Lighting and Mahaska Healthcare, to bring rental housing to their community. And it is not easy to do in rural Iowa, and that's an initiative that Hubble has taken on over the last few years. And so this project is 50 rental townhomes. It relies on TIF, and it makes the project work. The site that we have for this project is a shovel-ready site. So there are streets and there are utilities to the site, and so the TIF is coming from the economic development portion, the vertical construction of this project. And so this project will help bring employees for Musco, for Mahaska Healthcare, and assist the city of Oskaloosa, and we think there's a lot of value that comes from this. Currently, the site is, the annual tax on the site is $804. During the 15-year TIF period, we expect that to increase to well over $17,000, and then thereafter, the TIF period, it'll be above $150,000 a year. And so that's a perfect example of a project that if this bill, if the Division 6 goes through, that project would not happen because there is no TIF for that project without how this is drafted. And so we are asking that it be removed. Otherwise, we ask that that economic development piece stay in the 403. Thank you.
Thank you, Mr. Chair. David Amlin, representing the Future Compliance Hubble, being one, Metro Coalition, which I don't need to be duplicative of what the league said and the city of Dubuque said, and the third is Des Moines Area Regional Transit. They're here, and so I'm just going to defer my time to them.
Good afternoon. Amanda Wonke with the Des Moines Area Regional Transit Authority. Thank you so much for your time today. We share the governor and your commitment to efficient and effective services. In fact, that is why we have redesigned our complete network and cut expenses in order to keep property taxes low. In addition, we are already a shared services. We are a regional conglomeration of 10-member governments as a shared service. The transit levy is the only levy we have. It is already capped at 95 cents on the thousand. So unlike cities, counties, and some others, for pensions, for insurance, for other things, we are relying all on that one levy. In addition, as we look across the country to the chairman's question, 60 to 80% of urban and regional transit, for all that we've seen in terms of urban and regional transit, 60 to 80% of operating funding relies on local revenue, 80% of capital funding relies on federal revenue. So again, that's the kind of trade-off there. And so we do look across the country. Again, it is very typical that 60 to 80% is funded by local revenue. And so as we look at the future, as we look at contracts that have wages going up 3 to 5% and insurance that is going up 10%, a 2% cap will reduce service cuts on top of the service cuts, or will result in service cuts on top of the cuts we are already putting in place this summer. And 85% of our riders have household incomes of $50,000 or less. So we provide almost 4 million rides a year into our most needy population. They are relying on it to get to jobs, education, and medical. And if they don't have the transportation to get there, it will increase the needs within our community. And so we ask that you consider things, shared services, exemptions for things like shared services, CPI, or other adjustments in order for us to pay our drivers and pay insurance and those essential services for our most vulnerable residents. Thank you.
Thank you, Mr. Chairman. Senators, thank you for the chance to be here today. I'm Chris Hain, I'm president of Iowans for Tax Relief. We've had a wide-ranging conversation, and I think a lot of folks are probably ready for me to just pass this on so we can leave. We've had a wide-ranging conversation about how this impacts government. And I guess I'd like to give you a small statement on how this impacts the individual taxpayer. And what's encouraging of all the proposals in the building is that they try to do that. And I know that our legislators know this better than I think most of the folks that are advocating for or against this bill, is that they were the ones that were out talking to voters in the last election. Those are the folks, they showed up on regular Iowans' doorstep, and the message that they heard over and over was, my property taxes are too high. So that's what this bill, that's what the other bills in the building are here to do. And that's why this conversation is so encouraging for me. I've also been, it's curious to me that a bill which the part that we have perhaps supported the most, and I was for tax relief, the 2% revenue limitation, doesn't seem to be the primary consideration today. What really seems to be the primary consideration today is any limitation at all on government's ability to borrow for however long they want to borrow it for, and for whoever they might want to give it to. So when we think about the TIF conversation, I'd like to ask a question that's the flip side of this. Is who is it that you want to give the money to that is not got by this bill going into place? If you can only spend it on infrastructure, what are the other things that we're trying to do with the money? Because TIF was always supposed to be about creating a platform, creating the environment for the growth to happen. So we are very excited about the TIF conversation as well, and very appreciative of the governor bringing that forward. We support just a few other things. We support the move from a credit to an exemption. I think that's good tax policy. It provides predictability for individual taxpayers. We do appreciate opening the conversation on how we can better deploy state funds, and the provision about the unassigned reserves, and whether 10% is the right number or not. Happy to talk about the folks that are impacted by that. But we did some work on this recently that shows that 35% would be a whole lot lower than what some communities in Iowa are holding on to. So anyway, we think this is another great effort in trying to move this property tax conversation forward, and appreciate senators your consideration.
All right, hold on here. Sure. So as you indicated, one of the primary things you've been advocating for the last 2 years is your 2% hard cap, right? Delegated to 2 to 3 products down there.
Correct.
Okay. How, and I would probably disagree, I think we have heard about representation here, just to be fair to some of the other entities. How does a 2% hard cap, like what modeling have you done to arrive at that 2% number?
Well, I think as we've seen with modeling of anything inside of property taxes, there are so many moving parts in so many different jurisdictions that it's very difficult to arrive at even statewide number on that. We do have some of that data, and we happy to provide it for you. I don't have it with me today.
And so I know you've been on a hard cap, and I'll leave it at that there. Have you done any additional modeling, as I asked the other questions over here, as to how a hard cap works with a rollback variable in place versus a 17-18 in place?
Right.
We have over half the Iowa cities here that would be over 7-18. Or
we have tried to look at that. Do I have it? Absolutely not. Have we tried to take a look at it? Again, it's difficult. You end up with back of the napkin math on a lot of these things, which is why, at the end of the day, that we have come back to a hard cap, because we know that impact, that is going to limit things for every taxpayer across the board, that if you limit spending across the board, every taxpayer benefits. And that's why we've come back to that. Are there better ways? You've done some great work inside of moving to, reducing rollback and doing some other things. It's a very difficult conversation. I think you would probably know that better than anybody in this room. And we're happy to continue to work on that. The way we have stayed on the hard cap is because we do believe, without a doubt, it would apply to everyone across the board.
Just one final thing, does ITR have like any, I know you have your 6 principles, right? Does ITR have any like principles as well too when it comes to tax policy?
Yeah, lower and flatter and fairer for everyone.
Okay. Thank you.
Good afternoon, my name is Steve Richardson, I see some familiar faces here, and so want to take a couple of opportunities. First of all, I want to say that I'm here as a former state representative, serving in Ways and Means for 6 years, and I'm also the mayor of the city of Indianola, but I do not represent the city of Indianola as far as policy or the council or staff on these things, so these are my opinions only. To some of the comments made about 2% hard cap and some of the things that go on here, and a lot of the conversation here centers around a lot of our larger cities. And I don't know if you've ever done a study or taken a look at how many cities in Iowa, but the population of some of our cities, the 426 is the mean population of cities in Iowa. That means half the cities in Iowa are above 426 and half are below. So what I'd like to kind of talk about a little bit today is what a 2% hard cap means to those budgets for small communities. I had the opportunity in December to attend a training for public meeting training with IPIB. Sat in the room with a number of different folks from all over the state of Iowa. One of the folks was telling me that in their community, that in a community in New Virginia, Iowa, population of, I don't know, 476 or something like that, $1,784 is the new dollars under a 2% hard cap. I had another lady I was talking with from North Central Iowa. She was telling me that for the first time in 20 years, they were able to give their their single employee, their single person that ran the city, with their water, their streets, mowed their grass, did all those kinds of things. They were finally able after 20 years to give that person health insurance. That was in question now because of the 2% hard cap that goes into place. So let me give you a couple of other examples if I may. I'm not sitting, so well I could, I guess. So, for instance, taking a look at a couple of other cities, and oh, by the way, I did live in small communities for eastern Iowa. I grew up in Indianola, went to Simpson College, but I moved away and worked for 10 years, and I worked for 3 years in Dysart, Iowa, and 6 years in Stanwood, Iowa. Dysor's about 1,200 people, Stanwood's about 600. And they both had one person, again, that ran most of the functions of the city. So just to run a couple of cities here, Schleswig, Iowa, a population of 830. According to some of the numbers I've got here, their new numbers based on maybe some of the changes that might take place with the 2% hard cap, $7,236 would be their new money for the year. We take a look at Bennett, Iowa, population of 347. They have $3,207. That's their new money. We take a look at some of the other cities in the state of Iowa that are under that 426 cap, or median size. The smallest one would be Franklin, Iowa, and let me see here what I gotta get the right side here. Their new money in the next 2 years is $1,544. If the 2% stays in place for more than a year, $644 in fiscal year 27. The point being, what do you cut in those small towns? You have one person that maybe does everything in that small community. You have maybe a part-time clerk works 2 days a week, 3 days a week, whatever the case may be, or 1 day a week. There's really not a whole lot to cut when you don't have the ability to finance your city government. There's a lot of other examples I can give here. What we hear today, and again, it's not against any of the folks that are here representing the particular issues and the particular points. But we got to remember about taxes that one size doesn't fit all. I mean, every city's different, every community's different, and the ability for those cities and communities to tax and raise sufficient funds are incredibly different. I got to be honest, Senator Dawson, I appreciated your proposal, or the Senate proposal of the local option sales tax. Let me just give you an example. For the city of Indianola, what would happen if we were able to pass a 0.5% local option sales tax in the city of Indianola? That would represent about $1.1 million in new revenue. What I would suggest, and what I would tell our council, and what I hope our city does, is take half of that 0.5%, 0.25, which would be $550,000, give it to direct property tax relief, and the other half would go into capital projects. And I'll tell you why. We serve about 125 square miles fire and EMS in the city of Indianola. Our residents pay about $2.59 per thousand for property taxes for fire, EMS, police. Fire and EMS. This next year, that's going to be 57% of our budget, and when we get into the fiscal year 27, that will include the police department at 57%. But those residents in the rural areas, the townships, they pay 60 cents per thousand. So essentially what's happening is the residents of our community are subsidizing people in the rural areas for fire and EMS services. The other thing to consider with the local option sales tax, fire and ambulance equipment today is extremely expensive. We ordered a new ambulance 18 months ago, just finally got it, $360,000. Our ambulances run approximately 3 years because we have no county hospital, so we transport a lot of people to Des Moines. Our fire chief is from Pleasantville. I don't want to put words in his mouth or anything else, but I kind of had a conversation with him. He also serves on the volunteer fire department. And he was telling me that their ambulance is very old, has lots of miles, could break down any day. And so how do you, as a small community, again, if you don't have the revenue to deal with buying an ambulance or a new fire truck, which is the basic fire truck today is $750,000 or something brand new. Small communities can't afford those kinds of things either, so they buy used. And again, how long do those go? So I don't want to get too far into the weeds here, but my point with this is, I think there's other options, and I would make one other comment about everybody could go and talk and knock doors with, talk about property taxes. I ran for office this last fall, was obviously reelected. I was at 2,300 doors. I didn't get to all of them in our community. 2 people talking about property taxes. 2. One person told me, he said, listen, and this stuck with me for a long time, and it's still today, obviously. He said, when I buy my house, I have no choice but to pay property taxes. When I go to the grocery store, though, and I want to make a meal, I can buy all the components of that meal and pay no taxes on that. But when I go to the deli at one of our grocery stores and buy a ready-made pizza, yeah, I pay property or sales tax on that. And so his point was, he makes a choice then about what he pays on sales taxes for. And so his point was, why don't we move to the sales tax rather than the property tax? That was just a point that I thought one person that, out of the 2 that I talked with made that comment. So I appreciate everything you folks do, been in your chair before, and I do thank you for the time and opportunity.
Okay, that appears to be it for everyone in the room. We will now go online. Margaret, you're up.
Hi, Senators. Can you hear me?
Yes.
Excellent. Thank you so much. Margaret Watson, with Education from Morrisville, Iowa. The board registered is undecided. And as you know, schools are primarily budget funded, so the state has the opportunity to use the school funding decision like the one you just all sent to the governor to limit tax relief. And we did that with $42 million in budget guarantee for those districts with declining enrollment, with relief for one districts with a second enrollment account, and for all districts by doing a quarterly payment of state aid at the beginning of the school year, and that'll help with cash flow. We don't have any comments on any division other than Division 4, which accelerates the state division to pay for property tax relief. And that would eventually get there under the current law, because every time the sales tax revenue to SAFE grows by more than 2%, additional revenue is carved out to lower property taxes. That was originally going to take until 2049, the governor's bill makes that happen by July 1st, 2020. Now, since SAFE growth is currently limited, it hasn't kept up with construction costs, which is why so many districts had waivers approved bond issues last November. And I think that that's almost like a canary in the coal mine, that if biggest concern, however, is not that policy, but the fact that over 170 school districts have bonded against the sales tax. And those were all authorized by voters with their revenue purpose statements and went through readings. The experts at Piper Sandler have analyzed those district obligations against SAVE, and they show many districts have this defaulting on those bond payments if you accelerate to this level of 30%. And that's districts of all kinds. So rural, urban, or suburban, without that revenue stream, they can't afford payments. We don't have a whole purpose provision in the bill, but if we did one, that would create some serious equity issues for the other half of the districts that have not bonded against it, since the remaining pool of sales tax would be distributed per pupil at a significantly reduced rate. If there was a backstop, it would be good to have property taxes to make those debt payments. But then again, that circles back to the bill to provide property tax relief. So we just would be supportive of taking this particular provision out of that. Thanks for the opportunity to talk.
Margaret, hold on there real quick, you can come back up. So you talk about the districts that have bonded against SAVE. What is their mechanisms to adjust for that, I think on the default provision?
I don't know what mechanism exists if they default on that now. There's nothing in the bill that has a hold on this if they default. It might go back, I don't know if it's back in general fund or there's some kind of capital actions that they in the past.
Okay. How many districts?
172 as of January. I remember several hours ago.
Thank you.
Yeah, thank you.
Nicole, you're up next.
This is Nick Hockenberry.
Nick, I'm sorry, this is an example of how many needs of readers before long here.
All right, I am the president of the Professional Developers of Iowa. And I believe Craig Patterson should have emailed most of the subcommittee members our more comprehensive statement on this property tax bill as well as the others. So I'll just highlight a couple of pieces here. But I think first we'll state on behalf of our 300 plus members across the state, we are appreciative of the both houses and the governor's office consideration on property tax. I think it's been an important issue as we market this state to current and potential businesses to have more clarity and predictability in the property tax system. Just to point out a couple of challenges we see in the governor's proposal here, reiterating a lot of what you've heard related to the impacts to chapter 3 or 4 on the urban renewal area conversation. So the two pieces that we see as a challenge in the current language of this bill relate to the more prescriptive uses of property tax, or excuse me, tax increment in limited to both infrastructure, more discrete definitions of infrastructure, and no longer being able to be used as a performance-based incentive to business expansions. I believe our partners from the city of Butte did share the examples of a couple of projects where infrastructure is not necessary to incentivize the development, but the other tools that were brought there on those projects would not be available now. And then the other provision is related to the conversation on perpetual tips, but more specifically on slum and blight district definitions. A lot more members are rural communities. Many of the downtown districts in our more rural communities require a longer horizon to build up the necessary increment to even utilize the downtown revitalization program, whether that's facade grants or upper story housing grants. It may take 10 years to have enough increment to deploy a program, and then many more years to actually incentivize property owners to utilize it. So I just highlight that very specifically towards the slum and blight districts. So happy to have further conversation on this, either through Craig, Pat and our lobbyists, or with members of our legislative committee about other suggestions related to local law. Thank you.
Okay. Seeing as no one else looking to speak to the bill, we will now go back to subcommittee. So Mr. Down the end here. Sir, please.
Thank you, Mr. Chairman. One of the things that I think that we need to focus on, so many of the tax bills, and this one included, have provisions for age-related relief. And I think that we need to focus on ability to pay. It might be that a 65-year-old can afford to pay their property taxes, but a 45-year-old can't. And we need to be looking at ability to pay, not incentives by age. The other thing that we might look at is shifting the homestead exemption from just every homeowner that lives in their home receives that to, again, some kind of wage differential to give individuals the opportunity to feel contributing to their community at the very same time that they can pay it. The other thing, and there is a bill in regard to this, over 70 counties in the state of Iowa allow property taxes to be paid monthly. And I think that every taxpayer should have that ability to do that. So there might be some things that really we could address without putting limits on levy rate or growth that really helps the property taxpayer contribute to their community at the very same time that we take into consideration their actual ability to pay their property taxes, making sure that their assessment is fair and equitable in that way, giving them an opportunity to challenge that if they need to. But I wish that we were looking at ability to pay, allowing the local communities to elect their leadership to go to their taxpayers with their budgets and more or less permission to provide the services that their residents expect and deserve. They are the closest to those services. In many cases, certainly the neighbors, they're part of the neighborhoods in their communities. And I wish that those conversations were occurring as much as we are as state legislators second guessing what local communities need or can or should do. Thank you.
I don't have much. I appreciate we've got 3 products. I was listening through the filter of all 3 products, and we went through all the concerns so that I can look for which bill handles each issue in their own way. Definitely a situation where I think all three products should probably be moved along so that they are all discussed equally. I have a favorite. I kind of like the idea that the Senate has, but at the same time, this has been very educational. And I'm looking forward to hearing a lot of the same concerns and a few of the different concerns when we get to the other products. Oh, I do want to tell you, you were very sincere. I know you mean it when you're talking about the taking care of the ability to pay, and I don't question that whatsoever. The thought, I did not know that sometimes we're allowing monthly property tax payments. That scares me to death. For the reason is having payroll deduction is how the federal and state governments around the country fooled us into letting them take a third of our income, but only in tiny increments that only make us mad a little bit, instead of one great big chunk at the end of the year that it caused us to kick them all out or revolt. And now we're stuck with half our income being taken away by folks who say they're working for us.
I appreciate the governor going through the work to bring this bill forward. I know she took an extensive tour this past summer, and I was glad to take a part of the property tax forum in Davenport. Appreciate the comments everyone brought forward, especially Division 6 and Division 11. I may have received a couple of text messages about Division 11 as I sat here, and look forward to getting back to that. As far as where we sit today in our seat, we hear a lot of government entities who are wanting to keep up with inflation, and we hear that over and over again, whether it's the schools or other government entities. The taxpayer is not receiving compensation to keep up with inflation, so yet they're dealing with inflation and they're dealing with the taxes. They're trying to keep up with inflation, so they're getting hit the double whammy. So I do think it's important to keep the focus on the taxpayers and go forward.
Thank you, Mr. Chair. I have a different perspective in what I'm going to say in a whole part is once I'm from Des Moines. Being from Des Moines brings different problems, bigger problems, unique problems. You heard the mayor Indianola say, you know, what the price of an ambulance is because they don't have a hospital and they have to transport into Des Moines. Well, Des Moines has 4 hospitals and they're all tax exempt, property tax exempt. 40% of Des Moines is property tax exempt. Nobody wants to talk about it. You know, if you took any one of your communities and took 40% of your tax base and took it off the rolls, you'd have a whole different crying towel here today. But no one seems to care. The building we're sitting in is tax exempt. Well, I don't expect them to pay property tax, but they don't pay for fire service or emergency service. They do in Iowa City for the university, and those are state buildings. But the state capitol complex pays nothing for emergency service or fire protection. And so those are issues that could make a tremendous difference in a community like this, just to pay for your services rather than a property tax. Being around government my whole life, I worked for Polk County for 41 years. And, you know, we've tried merging, we've tried charter commissions, we've tried every type of new style of reorganizing government for the sake of savings. We all know in this room we've got too many counties and that they should be merged. Whether they need to be merged by population, they need to be looked at seriously because those are expenses. Appointing an auditor, appointing a treasurer, recorder, it might look good on the org chart. They got rid of elected officials, but you really didn't save anything. But you close courthouses, you merge them, you're going to have a significant savings. So really, we're still dancing around the issues of our problems. I heard an individual here speak about Belly West. Belly West is now in slum and blight for TIF. Why are they? Because Jordan Creek was built on TIF. It was supposed to be for urban renewal. There was no urban renewal when Jordan Creek was built. A lot of people made money on it. All the construction and developers, they all made money on it. But what did it do? It closed Valley West Mall. Well, what happened when Valley West Mall was built? It basically closed Merle Hay Mall. So, you know, we're Pac-Man around here in what we're doing. And no one wants to talk about that elephant in the room. I'm not a big TIF supporter. I understand the importance of TIF and what TIF has developed. But last year, we put 125 acres for the market district here in a TIF. Okay? Who in my district, who I represent, who are struggling with property taxes because they're retired, they're on fixed incomes, they don't have an opportunity to grow. What is it going to do for them when the market district gets developed in 25 years? Nothing. Because they worked their whole life to pay for their home and they own it. As long as they can pay the property tax. At the point they can't, they don't own anything. We force them out of their property, their only investment. And so I'm hearing a whole different attitude of all the business community here that needs an edge here and an edge there. But the fact of the matter is, we can't survive with 40% of Des Moines tax exempt. Who's got an idea how to fix that? Where does that come from? 2% growth for Des Moines? It's almost impossible. Just our police and fire alone. Because of all the tax exempt property we have to protect, you know, and all the infrastructure that we need, that'll eat that up on its own. And so we have some unique issues here, and that's who I'm here to represent, even though, you know, I should represent the state of Iowa. We collectively represent Iowa. We represent our communities. That's what I'm here for. And sadly, we're not even talking about the issues that are causing Des Moines its biggest problems. And that's 40% is tax exempt.
My initial thought is that not to offend former Senator Dan Dawson, but she might be giving her a run for money for favorite ranking member here at Ways and Means, I'll say that. So, okay, I didn't know where this was going to go, but I'm going to jump around here a little bit. And a little history lesson as to why are we talking about TIF. Some of you have been through this, some of you haven't, right? TIF, T-I-F, it's your tax rate and your increment times by, and that's how you finance your project, right? I will remind the entire building, last year, when we started this endeavor, there was not one TIF bill out there. Not one. Actually, I take it back, there might have been one halfway through session to expand TIF. Okay? Not one. But as we started to work through a joint product, and what we were trying to accomplish all along, not because of TIF, but because of the Iowan out there, the average everyday Iowan, we were trying to lower the rates so Iowans would get some relief. But what did local government start to do in counties? They started coming in, they started piling away. They started beating up version 1, they started beating up version 2, and what was the number one reason? Well, if the rate comes down too much, Senator, how are we going to operate TIF? Which current TIFs is an easy problem to solve, right? We talked about that last year. And then what happened? Like, well, it's not so much the current TIFs, we're worried about our future ability to TIF. Well, that there is a different question. Because if local government, then what happened after that, local government started lining up all the, you know, the community developers, the professional developers, private, all the whole consortium that we've heard here today. Then it was like a bar fight that kicked off. And everyone started coming in and saying, oh, you got to slow down this bill, and this is all going to impact TIF. So meanwhile, there's a few of us up here trying to fight for the everyday Iowan, and a vast majority of the confab in this building is fighting to keep that rate high perpetually. That's where the fight is at on this. And so then we finish session unable to achieve a property tax bill. And what happens this year? Because the lesson that was learned last year is that, well, before we solve property taxes, we're apparently going to solve TIF around this state because we're always going to be fighting against the TIF lobby for the everyday Iowan. So we went from no bill last year to a bill that passed unanimously out of the Senate on the calendar the final days of session. You have one active bill now. You have a second active bill here in the governor's bill. And by my count of Ways and Means, what I signed out yesterday, we have 3 more bills on TIF out there. We went from 0 bills to 5 bills in less than a year on TIF. And why? Because every elected official up here is trying to fight for the Iowan. And I'm not saying people with concerns here aren't, right? Be very clear on this. But at some point in time, we're going to have to pick a side. Are we going to try to lower that tax rate for Iowans? Or are we going to try to keep this formula as healthy as possible? That's enough there on that. But I just ask everyone to really think when we walk out of this room. And let me be clear, 2 of those bills, and by my tracking I was looking at, bipartisan unanimous support inside the Senate. Let that sink in, right? We went from 0 bills to 5 bills, all because we couldn't get a property tax. Well, I'd say all because of that. But you definitely raised the eyebrows, eyes wide open to legislators up here. All right. I'm done talking about that for a while. I wasn't sure I was gonna do it, but that was the volume of the discussion here, so I thought we should probably have a discussion on that. Related to the other provisions of the bill, on the hard cap specifically, I guess I'm still unclear as to the impacts for that, right? You know, we'll probably talk more in the product next week to some extent on that. But I guess from all sides, whether from the local government side or from Iowans for Tax Relief side or ITA, like, I'm still unclear if a hard cap is actually the way to go about it, right? You know, like, it's not just a hard cap we're talking about, that appears very simple, but it's a variable rollback still working underneath that can roll up or roll down, and it's 718 working underneath, which I would hope I can get some information from local governments out there. If we have over half of Iowa cities still under 718, or above their 810, what's that impact, right? Like, this is the questions I'm asking the entire room, because I'm not clear on the pathway forward on a soft cap, hard cap, or anything along those lines. What I do know is what I'll come back to, my opening comments, Iowa's 10th highest property tax in the nation. And the current system right now is broken. And I know there's a bunch of local officials out there that are doing their damn best to deliver a service out there, right? But we have to be honest with ourselves in the fact that if local control was working, we wouldn't be 10th highest. And if we do status quo right now, guess what happens on that? And everyone comes back here, to Tony and myself and everyone else up here, Kerry, Jason, and Cindy, like, hey, we're getting killed, because when I say 10th highest, let me be clear, commercial, industrial, even higher ranking in the United States. We're about the 5th highest. And everyone's gonna come back here, we're gonna be talking about TIF, we gotta keep that vibrant because of the high commercial industrial rate. We're gonna come back here like, hey, we need some more economic incentive programs because we have a high property tax rate. Come back here like, hey, we need some more housing credits because we have a high property tax rate. At some point in time, this darn building is either going to start to focus on addressing the root of the problem, or we can all kid ourselves and say everything is fine, we can go home and tell Iowans we can't get anything done. This is the first of 2 subcommittees, and I do genuinely appreciate all the feedback here, right? I genuinely do. But this is going to be a collaborative effort. We have people collaboratively step up and say what are the pros and cons on this, and at least understand where our history is, i.e. our ranking, the problems that we've had, as well as the obstacles, apparently, that I didn't know were going to be obstacles, and then find a pathway forward. Because whatever we decide, as a Senate, as a joint body, House and Senate, with the governor's office, the reality is that we can't move the needle in lower bills for Iowans, then we have no credibility on the issue. So, with that being said, I will conclude the subcommittee. I think we discussed previously that we're going to pass it with an amendment, and that would just be for the fact that just to keep a conversation going, and we'll figure out where the art if possible is with any of the 3 bills. Thank you.